In the world of real estate, some companies just follow the trends, but others, well, others seem to set them. Today, we're taking a deep dive into Tosei Corporation, a Japanese real estate powerhouse that just dropped some seriously impressive financial results for the first 9 months of its fiscal year. So let's get into it and see how they're pulling it off. All right, let's just start with the headline number, the one figure you really need to know, 20.9%. That is Tosei's revenue growth year over year. I mean, in any market, that is a huge jump, and it tells you right away that there's a really compelling story happening inside this company. So let's unpack that. Now, what's really interesting when you look at the details here is just how solid the growth is all the way down the line. We saw the revenue, right, up almost 21% to nearly 84 billion yen. But check out the operating profit. That's up almost 22%. And the bottom line, profit for the period, a massive 25% leap to over 14 billion yen. So this isn't just about selling more stuff. It's about profitable growth. And that is exactly what gets investors excited. Okay, so these numbers are fantastic, but they're really just the what. To get the real story, we have to dig into the why. What's actually happening under the hood that's pushing Tosei forward at this kind of speed? And to answer that, we've got to zoom out a little and look at the bigger picture, the Japanese real estate market itself. See, Tosei's success isn't happening in a bubble. It's totally connected to some pretty fascinating shifts going on right now, especially in the Tokyo condo market. So the general backdrop here is a Japanese economy that's, recovering moderately. But the key phrase on this slide is robust investment demand. Money is just pouring into Japanese real estate, not just from within Japan, but from all over the world. In fact, Tokyo was ranked the top city on the planet for real estate investments in the first half of the year. So there's a ton of capital looking for a place to go, which makes for a very, very active market. And wow, this slide right here perfectly illustrates the dynamic that's going on. On the left, you've got brand new condos. The problem? There just aren't as many being built, so supply is down. And with high construction costs, that scarcity has sent prices through the roof, up over 28%. So what happens? People get priced out. They turn to the pre-owned market on the right, where demand has just exploded by nearly 27%. And guess what? Prices there are shooting up too. This right here, this shift is absolutely fundamental to understanding Tosei's strategy. So you can see, Tosei is navigating a market with some pretty powerful forces at play. You've got these awesome tailwinds, right? That huge investor demand, a strong office market, rising rents, all good stuff. But at the same time, you have some serious headwinds. Construction, material, and labor costs are all going up, which can really squeeze profits. It's a super complex environment, one that really rewards a smart, flexible strategy. Okay, with that market context in our back pocket, let's peel back the layers in the company itself. Where exactly is this 21% growth coming from? It's time to look inside Tosei's different business segments, their profit engines. So where's the money really coming from? This chart gives us a fantastic at-a-glance overview. And you can see right away, two segments are doing all the heavy lifting. You've got the revitalization business, which is the giant here at 45% of revenue, and then the development business, right behind it at 26%. I mean, together, that's more than 70% of their sales coming from just those two divisions. Let's focus on that biggest piece of the pie for a second, the revitalization business. This is where Tosei goes out, buys properties, often older buildings that have lost some value, they fix them up, and then they resell them. Now, remember that crazy surge in demand for pre-owned condos we just talked about? Well, this business segment is perfectly, and I mean perfectly positioned to ride that exact wave. And the result of being in the right place at the right time? A cool 6.7 billion yen in profit in just 9 months. This isn't just a part of their business. It's a massive profit-making machine. Now for that second major engine, development. This is the more traditional side of things, building and selling brand new properties. But what's really incredible here is the massive growth they saw, which was driven by selling large, newly built apartment buildings and logistics facilities directly to big-time institutional investors, both from Japan and from overseas. And this bar chart, it really puts that growth into perspective. Look at that first bar. The development business revenue didn't just grow, it exploded by 46% year on year. That is just incredible speed. And you can see other parts of the business are doing great too. The fund and consulting business is up over 30%, and the hotel business is up 15% as it catches that rebound in tourism. And speaking of the fund and consulting business, here's another really smart part of their strategy. While development was driving that huge revenue growth, this segment was driving the fastest profit growth. This is where Tosei basically acts as an asset manager for other investors and earns fees. It kind of makes you wonder if they're selling the buildings from their development arm and then managing them through their fund arm, creating this really powerful, self-sustaining loop. And here's the proof of that focus: a stunning 42.8% year-on-year increase in segment profit. This just shows Tosei isn't just good at building and selling stuff. They're also building a stable, high-margin, fee-based business that adds a whole other layer of strength to the company. So you might be thinking, was this all just dumb luck? No way. This quote, pulled right from their report, reveals the absolute core of their strategy. They saw those headwinds, those high construction costs, and they made a deliberate choice. They, and I quote, consciously raised the ratio of the revitalization business. It was an incredibly smart pivot to lean into a market with red-hot demand, while neatly sidestepping their biggest cost pressures. So that's the story of the last 9 months, an absolutely brilliant performance. Now, let's turn our attention to the future and see what they're forecasting for what comes next. Okay, here's Tosei's official forecast for the entire year. They expect to hit over 98 billion yen in revenue and 14 billion in profit. Now, here's what's so interesting to me. They haven't changed this forecast. After such a monster 9 months, a lot of companies would raise their expectations, right? But Tosei is holding steady. It signals this quiet confidence. It's like they're saying, yep, we're on track, we know what challenges are out there, and we fully expect to hit these ambitious goals. So the final question is, what's the game plan? How are they going to get across that finish line for the final quarter and keep this momentum going into the future? Well, their forward-looking strategy is super clear, and it builds right on top of their current success. First, you got to keep feeding the machine, right? So they're going to be proactively acquiring more properties and land. This is essential for both the revitalization and development businesses. Second, they're doubling down on that tourism rebound by expanding their hotel business. And third, they're going to keep growing that high-margin fund business. That's really their move for long-term stability, increasing that recurring fee-based income that can protect them from the ups and downs of the market. So to wrap it all up, Tosei Corporation is just a fascinating case study of a company running a brilliant diversified strategy in a market that is just full of opportunity, but also full of challenges. By making that smart pivot to revitalization, while still crushing it in development and growing their other businesses, they've posted some truly outstanding results. The big question it leaves all of us with is, as this hot, complex market keeps changing, can they sustain this incredible momentum?